Apple, slowly but surely, it's rising. It's a relatively slow stock, as you can see, but it's a good stock so far. That's a weekly chart of Apple stock on BATS exchange. We've seen that there were weeks where Apple opened very low, but most of the times it has been a very nice wave. So perfectly we'll see an Apple stock to go down for a bit, like nearly 50%, move up. In this case it's going to keep up with the trend. However, it's unclear what exactly influence these kind of forces, but an overall run, considering that it moved from as low as 12 to 174 in less than 10 years, is good for a major stock. And I think that this is one of the perfect stocks out there. Why? Because everybody, first of all, when somebody has $1 million to invest and doesn't really know much about investing, in a sense he's not really a trader himself, is that he's probably going to look at stocks that are known, and that's, for example, Apple. And in 2009, when trading became truly popular due to the fact that there was a recession and everybody was introduced to this concept of recession and consequences of it, they probably realized that it's a good idea to invest because they learned about it and it gives benefits, such as dividend payouts or profit made from selling stocks. And by knowing Apple, anybody could certainly invest into Apple because it's a very, very known stock. Now, if somebody did in fact invest in it after the recession has hit and kept it for nearly 10 years, he would have ended up with many millions of dollars after investing just 1 million. And that's really, really good. Obviously, investing in currencies is a bad idea, because currencies tend to be a lot more volatile. However, not all currencies are that volatile. Some of them just move many years upwards. Some of them move many years downwards, but it's not thousands. Percents and so forth. However, I'm sure there is money to be made in currencies, but just for now, due to its volatility, which means that it's moving up and down a lot, but within a certain support and resistance bracket, it makes it an unsuitable investment, long-term investment. There's a lot of talk about currencies. However, it probably does not say that it's popular due to the fact that it's volatile. And for example, as you can see, every minute Euro USD pair is moving very intensively up and down, and these are the opportunities that traders can actually use and make money. So for a very basic trader, for example, right here, with an idea that the market just moves up and down, you can see that it went up and it went down, and if somebody kind of caught up with these highs and lows, he could have made a lot of money, and that's solely due to volatility. If the market wouldn't be very volatile, it wouldn't be moving as much whatsoever. That's an Apple stock right here. Very choppy stock, as you can see. Many openings out there are certainly terrible, absolutely terrible. As you can see furthermore, it's not very volatile. It's not that volatile. It obviously opens up in a different position, but to my view, that's not volatility, due to the fact that, as you can see here, there's absolutely no volatility here. And what I want to say is that in these kind of situations right here, it's so bad that there's no way of telling what's going to happen, and then the market just opens so differently from its previous position that it's just insane. So that's an example of no volatility whatsoever. So somebody trading a minute wouldn't make any money on this whatsoever. Look at this line right here, and just imagine if you would have bought here and the market opened so below you, you would have lost a lot of money, and you would only be able to recoup it somewhere here and not fully recoup it. Obviously you could fully recoup it on January 5th, but your loss would have been on 2017 December 22nd, and you would have waited a long time for your money to go back. And that's solely due to the fact that there are these kind of ferocious jumps out of current position. It looks like I'm making a lot of money. The market is still moving upwards, so my decision to wait it out was correct. I expect to catch up with the trend where the market will certainly start moving south. Every time it moves forwards, there has to be a short correction like this, a movement downwards. That's just the way it works, and obviously that's what makes my mind to change the position. Sometimes if the market moves up a little bit too south, I would expect it to keep going south. However, that's not always the case. For example, right here, as you can see, it moved south quite a bit, but it's not it's not a downtrend. After a short correction right here, it just keeps moving, and then it corrects itself and keeps moving. So pretty much, if it wasn't going towards a longer trend upwards and downwards, it's just a correction, that's it. It just kind of represents money inflows that at any point in time there are millions exchanged, and a lot of it is bought and a lot of it is shorted or sold, and we can see on the mini chart just how much that was. So we can say that people have shorted or closed their positions right here, and then we know that people bought, and it kind of shows this market where, for example, somebody sits down and he wants to buy 100 Bitcoin, and he just tries to catch up that perfect position, and it's normally going to be when the market actually bottoms down. The way I look at it, right, is that, for example, if I'm going to buy 100 Bitcoins right now and keep it for 10 years, I look at the market here, I go to 1 minute and say, hey, it's going up I'm not going to buy it. I want it to go down, and probably that's what it kind of feeds on, is that the moment it starts to go down, the moment people kind of short more than they buy, then the people who want to buy or short, they kind of take these into account and just pick up the best spot. So if it bottoms out, people just kind of start to buy, and then it moves up, and when it moves up, people start to short because it kind of reached its peak. And there's kind of all kinds of these mind games. That's how the math works behind stock market. It's pretty much buy, sell, supply, demand. You get the curve, you have more money in the bank, the chart goes up. You have less money in the bank, the chart goes down. The question is this all lies? It's probably not, because that's how underlying math works. However, if it's manipulated, I personally believe yes, absolutely, because if there would be no manipulation whatsoever, everybody would just collude and either buy or sell because it's their money, and the chart just wouldn't be volatile anymore. They would just, I would expect everybody will follow the trend, and the stock market would be no more. However, the stock market itself serves a much higher purpose. So it's not just about supply and demand when it comes to stock market. Stock market actually, it creates, or let's say determines, value of a specific asset out there, and that's probably the companies themselves and commodities. So it's like unreal. It's like we're in a video game right now. When you look at this, imagine it to be unreal, and I'll explain it to you. You see, right now we, for example, look at a commodity, and let's take a unilateral commodity, and that's gold right here. Gold is everybody's money, right? If gold would be considered a cryptocurrency like unit of money, it would be everybody's money, just like cryptocurrency, because nobody owns the gold itself. It's in the ground. Now, you see why stock market isn't a joke and why I believe it's manipulated. And supply and demand only works for the math determining the chart level or the chart price, and has nothing to do with anything else. I think that the math is manipulated so that we could eventually end up with the price. Now, what I'm trying to explain here is that nobody in the entire world, no country or individual or entity out there, owns gold and can determine the gold's price on its own. However, here in the stock market that we currently see, there's a gold price, and that gold price right now on January 8th 2018 is at $1,318 on Forex.com exchange. This means that everybody in the world out there are bound to buy, and most importantly so, because nobody else would buy for more. Obviously there are exceptions, however, nobody would buy for more than the actual price is shown right here on the stock market, on some exchange. So This is a proof that somebody is manipulating the world itself. You may believe that it's your decision to buy and sell gold, and you would eventually influence the price of gold. However, I believe that this price is manipulated so that everybody would follow a specific pattern, a specific regime, where the people who set this price right here control everything. So that's the thing right here. If you find a nugget out there somewhere, a nugget of gold, is going to be worth just like that. You can't say I'm going to make its value go higher or lower. No. If you go to a pawn shop or a gold shop or whatever place you'll find where they accept or buy gold, they will probably first of all look at the current gold price, put on their profit margin, and would offer you their price. And that's it. So if it's currently at 1,318, that means that a pawn shop may buy it from you a 1 kilogram, 1 ounce for a lot less, but they will look at this price first. So if you have a nugget that's worth $100, based on this price is going to be worth $100, they may buy it from you offering you 90. However, if this price is somewhere out here where it used to be at nearly $2,000, then they would offer you a lot more. So that's the thing. People can't make up their own price. Right here, they can create a monopoly. There is some kind of a world order out there. I'm not sure who is in control of it, but obviously everybody is bound to follow this price right here shown on this screen. Based on the exchange, the price may be different, but it's not going to be different by much. And then we go in, for example, WTI crude oil, and we see the same thing right here. United States of America is bound to sell its oil, which is their oil, WTI, for $61 on January 8th, 2018. They can't really make up a different price. And that's the thing. It's like, but why would all those companies out there that are drilling oil would follow a chart on a screen? You know, they can just turn off their computers and make up anything they want. You see, they can just collude it, get together and say, let's make it $100 once again. They want you to believe that just because millions of people out there in the world pressed a sell button on oil right here, inputted a gazillion, a trillion dollars out there, sold, and the price just went down to like $2, right? That's not going to happen, because definitely somebody is manipulating this, and nobody has that kind of money to influence it too much anyway. So what I wanted to say is that everybody, including United States, is bound to follow this price right here. So for example, that's VTI, But there are other oils out there, and once again, for example, there are countries that rely slowly on oil exports, but they can't sell its oil if they want for more. They have to follow this price, and that may mean that the country will move back into poverty before it discovered and started to export